Okay, if you really want to get under the hood of how state-driven economic inclusion works, you can't just listen to the speeches. You've got to actually dive into the laws that build the framework. So today, that's what we're doing. A deep dive into the legal blueprint for a really unique player in South African finance, the South African Postbank.
That's exactly right. We're looking at the South African Postbank SOC Limited Act, Act 9 of 2010. And like you said, this isn't just some dusty old law book text. It's the actual scaffolding, the legal structure that tried to turn a government service division into a proper, regulated commercial bank, and crucially, one with a very, very specific social job to do.
Yeah, and for you listening, trying to get your head around this, it's important to see it as something, well, alive, really, not static. It kicked off in 2010, sure, but the whole structure has been tweaked and refined. Big changes were brought in as recently as February 2024.
February 19th by Act 10 of 2023. That shows, the ongoing effort, or maybe the ongoing difficulty of making this specific kind of bank actually work.
Right. So our mission today is to try and cut through some of that complexity for you. The basic aim, laid out right there in the long title of the Act, seems pretty clear on the surface.
Yeah, it's about incorporating the old Postbank division from the post office, setting up governance, and getting the ownership sorted. Specifically, shifting the shares to the government, but through this special vehicle called a bank controlling company, or BCC. And the whole thing has to fit under the big umbrella of the Main Banks Act from 1990.
Okay, yeah, let's unpack that. It sounds like a lot going on there. Maybe start with the transformation itself. I mean, the scale of it. We're going from the former Postbank, which wasn't really a bank, just a division under the Postal Services Act.
Exactly.
To this whole separate legal entity, the Postbank SOC Limited. The Act calls it the company.
And that switch, that moment, is defined as the transfer date. Section 7 spells it out, and it wasn't gradual, it was like instant. On that specific date, every single right, every obligation, asset, liability, all the customer deposits, investments, everything held by that old division, just poof, legally transferred to the new company.
Billions of rand, millions of people's accounts just moved across legally overnight.
That's the scale we're talking about.
Yeah.
So the legal framework had to be absolutely watertight for that.
Okay, but it's not just any bank, right? Its purpose isn't just profit, unlike a typical commercial bank. Section 2, the bit about the company's objects, seems to hammer home this social mandate.
Oh, absolutely. It's fascinating because it's got this dual nature baked right in. Yes, it has to operate like a bank, attract savings, be the government's commercial bank. Standard stuff. But then, bam, its primary focus is explicitly stated, expand banking services to rural and lower income markets.
Right.
And target communities that have little or no access to the usual commercial banks. That's its core mission.
So it's kind of like the state's tool for financial inclusion. While other banks might chase high-value customers, the Postbank has to focus on, say, someone getting a social grant or needing a basic savings account way out in a rural town.
Precisely. And the Act doesn't just say focus, it gets specific. It must promote universal, affordable access. It must ensure its lending is responsible, specifically for those underserved markets. And importantly, its fees, its rates, and charges have to consider what's affordable for people on lower incomes.
So it's not just offer a service, it's offer the right service affordably.
That's the mandate.
And how does it actually reach those people, especially in rural areas? Does it piggyback on the post office?
It has to, really. Section 9 makes that clear. It mandates an agreement between the new bank company and the post office, specifically about using the post office's huge network of branches, its infrastructure, to deliver the banking services.
Ah, okay. So that massive physical footprint deep into places other banks aren't, that's its key advantage for the social mission.
It's arguably its biggest asset for that part of the job. But, that immediately raises a question, doesn't it?
Which is?
Well, how do you meet modern, complex banking regulations, think IT security, compliance, while heavily relying on, let's be honest, sometimes quite old-school postal infrastructure? It's a potential tension right there.
Yeah, I can see that. That structural point, maybe that leads us to the corporate structure itself, the bank controlling company, the BCC. For anyone listening, trying to map this out, why on earth did the law require setting up two separate state-owned companies to run one bank?
Okay, this is probably the most crucial bit to understand about how this act works. And the short answer is regulation, pure and simple. The Act, Section 3, mandates two entities. First, the Postbank SOC Limited, that's the actual bank doing the business, the one we've called the company. Second, The South African Postbank SOC Limited, that's the bank controlling company, the BCC.
And the government owns the BCC.
Correct. Government is the shareholder of the BCC, and then the BCC holds 100% of the shares in the operating bank, the company, basically on behalf of the government.
Okay. But why the extra layer? Why not just have the government own the operating bank directly? Seems simpler.
It seems simpler, but the Banks Act, the big law governing all banks in South Africa, wouldn't allow it for this type of entity. The BCC exists because of the Banks Act requirements for who can control a bank. Its only job is to be that controlling company. It acts as a kind of regulatory buffer.
A buffer. What's a buffering?
Buffer.
Or protecting again?
It's protecting the bank's depositors and ultimately the financial system. Imagine if the bank was directly owned by, say, a government department, or even the wider post office group with all its other operational issues. The risk, from a banking regulator's perspective, would be huge. What if political issues or failures in the owning entity spilled over and destabilized the bank?
Ah, I see.
So the Banks Act demands this structure. The BCC, the controlling company, has to focus solely on things like compliance, risk management, capital adequacy, good governance, basically making sure the operating bank underneath it is run soundly and safely according to banking rules. Section 15A and 20A really get into the BCC's duties here. It insulates the bank itself from potential turmoil elsewhere in the state apparatus.
Okay, that actually makes a lot of sense. So the BCC is like the guarantor, ensuring the bank is stable first, before it even gets to the social goals. Right. Let's shift to governance then. With this setup and this huge social responsibility, the people in charge must face some pretty strict scrutiny. Who actually controls the operating company?
Day to day, it's controlled by its board of directors. The Act specifies 5 to 9 non-executive members, plus the chief executive officer, CEO, and chief financial officer, CFO, as executive members.
And who picks them?
The appointments are made by the minister responsible for communications. But, and this is a big but, has to be with the agreement, the concurrence of the Minister of Finance.
Ah, another check and balance. So the communications ministry might focus on the service delivery aspect, but finance has to agree, presumably ensuring financial competence and prudence.
That's the idea behind the dual sign-off. It balances the operational mandate with financial oversight.
And what about qualifications, beyond just getting the minister's nod?
Well, collectively, the board needs expertise across banking, finance, economics, the usual skills you'd expect. But the absolute non-negotiable, hammered home in Section 12, is integrity. Every single board member must be deemed a fit and proper person under the Banks Act.
That phrase again, fit and proper, it comes up constantly in financial regulation, doesn't it? It really signals the level of trust required when you're handling public money and providing essential services.
Exactly. And the Act backs this up with really strong disqualification rules in Section 13. It's about breaches of trust. You're automatically out if you're an unrehabilitated insolvent, basically, bankrupt and not discharged. Or, critically, if you've ever been convicted of an offense involving dishonesty. We're talking theft, fraud, lying under oath, perjury, corruption.
So zero tolerance for past financial misconduct.
Pretty much. For you listening, the message from the law here is clear. You can't entrust a bank designed to serve vulnerable people to individuals who've shown they can't be trusted with honesty and financial responsibility. Oh, and conflicts of interest, too. Having any direct or indirect interest that clashes with the bank's business is also a disqualifier.
And if someone on the board slips up ethically after being appointed, say, they hide a conflict of interest,
then the Act brings down the hammer. Section 29 makes it a criminal offense. If a board member fails to disclose an interest they should have or uses their position improperly to gain some advantage for themselves or someone else, they could face a hefty fine or even jail time up to 5 years.
Wow. Okay. Serious consequences. And does this fit and proper standard apply to the top executives too, the CEO and CFO?
Yes, absolutely. Section 18 covers them. They're appointed by the board, again with ministerial approval or concurrence for terms up to 5 years, which can be renewed. And they, too, must meet that same fit and proper test under the Banks Act. The integrity standard runs right through the leadership.
Right. Let's widen the view a bit. Where does this Postbank, with its 2 companies and its specific act, sit in the bigger picture of South African law? You mentioned the Public Finance Management Act, the PFMA. That applies too.
Yes. Both the operating company and the BCC are subject to the PFMA. That means things like annual reports, financial statements. They have to submit these to the minister, who then tables them in Parliament. So there's that layer of public accountability.
Okay. But what if there's a clash What if something in this Postbank Act seems to contradict something in the main Banks Act, the one that governs all banks? Which law wins?
Ah, the million-dollar legal question. And the Act gives a very clear, very direct answer in Section 26A. This is the conflict of laws rule. It states, unequivocally, if there's any conflict between this specific Postbank Act and the General Banks Act, the Banks Act prevails.
Always. Always. So the rules for general banking safety and stability trump anything specific to the Postbank's mission if they clash.
That's exactly what it means. Financial stability, regulatory compliance, as defined by the primary banking legislation, are paramount. They come first. So let's imagine a scenario. The Postbank wants to set incredibly low fees to meet its affordable access goal, right? But if doing that risks breaching the capital adequacy rules set by the Banks Act, well, tough luck. The bank must comply with the Banks Act.
So the social mission, however important, operates within the rigid framework of financial regulation. It can't override it.
Precisely. It has to be a safe, sound bank first, according to the general rules, before it can focus on its specific social objectives. It gives it a social heart, maybe, but an ironclad regulatory skeleton.
That tension is really core to understanding this whole thing, isn't it? The potential need to compromise some social aims for stability.
Yeah.
Okay, one last area. What about when things go wrong, especially in the early days, before it's fully up and running as a registered bank? Is there a safety net?
Yes, the Act includes quite a powerful intervention mechanism for the minister, detailed in Section 25. This applies specifically until the company gets its final registration as a bank. If the minister believes the company is being mismanaged, or it's not performing effectively, or acting unfairly, or breaking the law, they can step in.
Step in how?
Yeah.
Just issue warnings.
It starts with directives, yes, telling the board what needs to be fixed. But if the company doesn't comply, the minister's powers escalate significantly. They can replace individual board members directly, or even appoint an administrator to take over certain functions, effectively sidelining the board.
Wow.
And then there's the nuclear option, as you might call it. If the minister completely loses confidence in the board's ability to run things properly, they can dissolve the entire board.
Dissolve the board entirely. That's huge power.
It is. It shows just how seriously the government viewed the need for stability and effective performance, especially during that critical startup phase. They built in an emergency brake.
Okay, so this deep dive really highlights the intricate legal dance needed here, trying to blend state social goals with the very strict, very demanding world of commercial banking rules.
I think that's a good way to put it. To recap for everyone listening, the Act built the legal vehicle to turn a government service into a proper bank. That two-company structure, the BCC controlling the operating company, isn't just red tape. It's a requirement of the Banks Act, there to enforce solid governance and manage risk. It's a protective shield. And while the Postbank has this crucial social mission serving rural and lower-income groups, the whole edifice rests on one fundamental legal principle.
That the Banks Act is king.
Exactly.
Yeah.
Financial stability rules, as laid out in the Banks Act, always win if there's a conflict.
So the success of this whole enterprise seems to balance on a knife edge, doesn't it? Can it genuinely fulfill that tough social mandate, reaching deep into underserved markets, keeping costs low, while also maintaining the rigorous financial discipline and ethical integrity demanded by top-tier banking regulation? And that constant requirement for leaders to be fit and proper seems like the main guardrail trying to keep it on that edge.
It's a huge commitment to accountability, built right into the law.
Which brings us to a final thought, a provocative question perhaps, for you to mull over. If the Banks Act demands stability above all, potentially pushing the Postbank towards practices, maybe rates or service limits, that look more like traditional banks, how effectively can it really deliver on its unique promise? That promise of truly affordable, accessible banking for those the private sector often ignores as too risky or not profitable enough. Where does that line between fulfilling the social mission and ensuring financial survival actually get drawn in the real world?
That inherent tension between the mission and the compliance reality, that's likely going to define its path forward.
Definitely something to think about. That's all we have time for on this deep dive. Thanks for joining us.
Thank you.